Welcome back to the channel. I'm Foreman, and in this week's video I'm going to be giving you the UK stocks that I'm buying right now. There have been quite a few acquisitions this week and I would like to drop you right into it. Furthermore, when I've got greasy hair, croaky voice, I've had a night out before, so the episode will be interesting. And if you like today's video, please drop one of these to help beat that YouTube algorithm, or for the hell of it, drop one of these because why not? My portfolio has underperformed the markets this week. It is no surprise. The FTSE 100 is up by 2.38%, the FTSE 250 is up by 1.24%, the S&P 500 and the Nasdaq 100 are both up by 3.6% respectively, although the US markets haven't quite closed as of recording this, but are very close to. My portfolio has significantly underperformed and dropped by 5.19% this week, so a very large and staggering move, and this has been for the most part pulled down by my largest holding as per usual, which means now in the 613 days that I've been invested in the stock market, I'm actually down by 21.62%, which means effectively 1/5 of my capital that's been invested has been immediately, well, not immediately, but has been wiped off. However, I have little to no concerns about this. I invest in stocks in which I have high conviction. Yes, my conviction with Argo Blockchain is questionable at the moment, and I acknowledge that mistake. I don't think it's worth selling, but I'll explain more about that later in the video. I don't have that much of an emotional concern about this money because I can afford to risk it over a longer term period. It's money that I can afford to lose. That's basically what I mean. And for me to suddenly go, oh no, in 613 days, I've massively underperformed because it's been so easy to make money, I should quit and just give up everything I've worked for. Maybe I should stop reading the books. Maybe I should just quit. No, that's not how it works. And for so long as I'm underperforming, you're going to know it. I am being honest in this. A lot of YouTubers would hide their returns. They'd go, actually, no, yeah, I did fine this week. Yeah, and make stuff up. I'm not about that. You can see exactly that I'm losing. And at the moment, I'm losing a significant portion of my net worth. After all, these holdings represent at least 95% of my total net worth. And so you know that I am losing significant amounts of capital, and you can see exactly my psychology behind the investment strategy. And even then, if you can learn from the lessons I've learned or the mistakes I've made, then I think you would be a step ahead of me as an investor, which obviously means you might still be underperforming, but it'll put you a step further or closer to your goal of reaching perhaps financial independence or better returns in the stock market. Now, there was a lot of news this week. Bitcoin this week has dropped by about 2.69%, which means I have massively also underperformed Bitcoin as well when compared to GBP or Great British Pounds. We've got Warhammer being mentioned again by Henry Cavill. He is the actor of Superman and the Witcher star, and he routinely talks about this hobby. You can understand that a lot of the celebrities like Graham Norton don't quite understand what this is. He even at one point mentioned, but do you paint World of Warcraft, which obviously is a completely different brand, but he enjoys it, and this is the start of a mainstream. It seems like it's more acceptable to become quite, I'm going to say, nerdy, and in this way it means more people are open about their hobbies. They're like, hey look, I play video games. It's become more of an acceptable thing in society, and therefore Games Workshop is well positioned with their Warhammer brands to do well off of this trend. It will take one celebrity and then more, and then eventually their adoption will be quite high. I mean, it already is high, but it just means that more people will be getting into the hobby and there's less restrictions on it. Whereas if we go 2 decades ago, back to when I was just born, I'm obviously going to remember this, I understand that the society or societal views were a lot more different. If you were probably bullied in school, for instance, for enjoying some of video games, for example. So these are just some things, very anecdotal, of course, but some things I thought I'd mention. We've also got Space Marine 2 landing with a bang, and this is then the game that's going to be released in the upcoming future. The GIF and the trailer looks pretty cool for it, but it is just going to be a third-person game released on PC, PlayStation 5, and XS, which I'm guessing is Xbox. But Games Workshop have had a trading update release this week, and the thing with Games Workshop is they're usually very vague in their trading updates until you have the big period updates. So for this one, we've got the 6 month, which is their half-year update, and they've got, what, 4 sentences, 5 maybe, in this whole update, which is quite amusing for me. They've mentioned that the trading update is in line since their last one, and that their estimates for results is not less than £190 million. And this is for, I believe, profit before tax of also not less than £86 million. Note that this is actually lower than 2020. However, this is due to a difference in currencies, but also the fact that obviously foreign exchange movements increase carriage costs, and the cost of paying more to their staff has obviously impacted their profit. And yet again, they've also paid £2,500 in cash to each employee under the group profit share scheme in December, and this will likely continue on. They're looking to reward their employees for the hard work they provide, and this scheme, I think, is well placed. After all, I think a company with a quality management like this, and to keep your employees enticed, is to offer them bonuses in this form. If you're making such high margins like Games Workshop is, then some of that money can be reinvested into your employees, and that money you pay them, they'll provide 10 times as much worth. So I think it is incredibly wise. You might go, well, what if they paid that as dividends to investors, or what if they just reinvest that into the growth of their business? I think this is a very good investment, and I believe this counts as an expense, which means they don't obviously pay tax on it, although I'm not an accountant by any means, and it's a bit out of my depth, but I believe this is a well-placed move for the company, and it's something that will keep them going and keeping them around forever, as they like to mention on their annual report. They've also mentioned their licensing income has increased to £19 million, pretty much over double what it was in 2020. There's some significant commuter game licensing deals with Nexon and other major licenses, which, as we talk about, we've got Nexon. They are looking to release a Warhammer Age of Sigmar player versus equipment, which is PvE, so like the computer, for instance, you're playing, it will be a multiplayer role-playing game in a virtual world, which is obviously that of Warhammer's Age of Sigmar. Again, this will be a PC, console, and apparently a mobile launch, which is particularly interesting. However, I have looked at some of Nexon's portfolio of games, and to be honest, I don't really think I can recognize many of these except one. And the only reason I recognize this is because I played MapleStory when I was very young. I'm talking about 6, I think, and I played it for about 2 days and then quit. So this games library isn't providing too much confidence, but I'm sure some of you watching this video will know a lot more than I do, and you might say, oh, actually, Godzilla Defense Force is a very popular game, for instance, but it does seem that they target iOS and Android quite heavily now, actually, which might suggest, or might be why I'm obviously not involved. Actually, so if I have a little look at iOS and Android, so about half of their games are actually on mobile, and perhaps they are very dominant in this sort of area, and that's probably why I hadn't heard of it before. Nonetheless, a good thing, licensing, more brand awareness. This brings it to potentially a new audience, especially if they push it onto mobiles that perhaps Games Workshop hasn't been targeting before. Overall, a very positive thing for the company, and obviously because the trading update was already on expectations, the shares dropped immediately on the day by about 5% and recovered by the end of the day. No concerns to me whatsoever. To be honest, it's Games Workshop. They're going to under-deliver. They're going to under-promise and over-deliver, and that's what they'll continue to do. Let them work away in the background. Let them be a boring company by all means, whilst you can quietly and accumulate a position in the stock, or at least I am, and then you'll likely do well over the longer term. This week I bought shares of Sylvania Platinum, and when I say shares, I think I've bought about 9. So this is by no means a big position, and it's worth about £8 or something like that. I was going to buy more, but my limit order, or whatever order I placed on the market, didn't work very well. I wanted to quickly explain why I've bought this. They are invested, or they're not invested, but they're engaging in the retreatment of Platinum Group metals. So I believe this is obviously platinum, rhodium, palladium, and that's the lot. However, the concern is here that they are doing it in South Africa and Mauritius, which I think is Northern Africa. I'm not entirely sure. We'd need to do more research on that. But this could be a higher risk area, for instance, and obviously could present some geographical tensions and risk. However, when you look at their fundamentals, on a price to earnings ratio, they're only 3.2 times. Price to sales ratio is 1.5 times. Obviously, a company at the size of £239 million based in South Africa and Mauritius would suggest significant potential risk, obviously because they are not well diversified, hence why they are not trading at a premium to the market, but they probably are trading near enough what the industry would say. I like it because they have very strong earnings for their revenue, and they seem to be delivering value towards shareholders, and they also pay quite a nice dividend. You can see how this has grown quite well, and even then I don't think platinum and rhodium groups of the metals really, or PGMs, have done too particularly well to see an increase such as this. And the dividend themselves is 4.56%, which I think would be good for my income in my SIP, my self-invested personal pension, and they have absolutely zero debt and rising levels of cash, including $106 million, which actually is nearly half of that of the market capitalization, which means their valuation on a price to book ratio is very attractive at 1.3 times. So overall, it's a buy for me. I've bought a few shares, only a handful. I don't want to be overexposed to this stock, but I would like some of the income they provide. They did recently pay a dividend, and their price performance hasn't been too strong lately, so that's why I've been buying. We've also had the London Stock Exchange Group acquiring a company named Quantile. I believe they were founded in about 2015. Yeah, they were, and they had some similar directors or some network between the two companies, which mean obviously they were very much aware of each other and likely did some business. London Stock Exchange Group is looking to buy, or has agreed to pay, up to £274 million to Quantile's shareholders. They would likely do this, and then they would own it. However, this is waiting upon more, obviously, regulatory investigation to see that this doesn't make LSEG too powerful in any means, or perhaps concern to the competition, for instance, which is the downside of this industry. This is a very hard moat for any new companies to get involved in, but this is also a very attractive business that's going to likely continue making money for longer than I am alive. Apparently, this business, Quantile, is a provider of portfolio, margin, and capital optimization services for banks, hedge funds, financial institutions, including trading derivatives. So basically, I think the idea is here that they're trying to increase their portfolio of services so they can deliver. They could be like a one-stop shop of value for those institutional buyers or investors in the market that are looking to make money. Why not stick with LSEG? They'll have Refinitiv, they'll have all of that data, which at the moment they're providing it at cost basis. They've got the markets, they own obviously all of that, and they provide the liquidity, etc. And now also they might have some extra trading tools for those that are interested. Overall, I'm quite happy about this. I still only hold one share, but I'll likely be buying more once I've transferred in my pension to my SIP, which I have started the process of, and we'll see how long it goes, and that will give you an honest update on how fast Freetrade work effectively, although my previous pension was with Nest. We've also seen a sizable Boohoo stake snapped up by Norway's central bank, which is Norges Bank. I don't know how to pronounce that. I'm not from Norway, obviously. Well, maybe not so obviously with the hair I've got going at the moment, but they've snapped up a stake worth 3.1%, and obviously this is after the recent changes in the company, such as their improvements in ESG, their US class action lawsuit now becoming pretty much written off, and that they've found a deal and it shouldn't break through, but it still could. And if you want to know more about Boohoo, I'll leave a card at the top right of the video. I have obviously been buying more shares of Boohoo this week. I'm bullish. Just quickly, if you want to see obviously how to tell when a company has bought more shares, if you come to the RNS, the notification of major holdings in a company, basically every company in the UK will have this. This will be the standard form. You can see the issuer name. If you don't know who it is, you can probably just Google it and find out. And then you can look, okay, reason for notification, it was an acquisition or disposal of voting rights. This can be a little bit confusing because it is voting rights. It doesn't necessarily say that they hold the stake, but it's important to note it says the bank here, it says they're from Norway. You scroll down a bit and you see, okay, resulting situation where the threshold was crossed. That's not really too important. That's basically when they've released this. You can see, oh, okay, they own 2.84% plus extra voting rights through financial instruments, which gives it roughly 3.17%, and this is the total number of shares, I believe, although I would need to double check that. But voting rights typically is one share is one voting right. And then you can see, but you might be wondering, well, how do you know that they've just opened a stake? Simple. Basically, if they had data in this column, or this row down here, sorry, you would then know, oh, okay, so they had 3% voting rights before, now they have 2.84. That would be therefore a disposal of shares, but because it's blank, they didn't hold any shares previously, and now they've opened a position. I think it's a bullish sign, but Boohoo shares are trading down at the moment. I think they closed at £1.55, marking one of my lowest performers in the portfolio. And I have no concerns. I'm going to continue accumulating on a weekly basis. I'm going to keep buying shares whenever possible, unless obviously the story or the fundamentals change. I think there's a lot of concerns over the trading update, which says that they're only expecting 20% revenue CAGR. And I think people that had bought in the last few years were expecting more or more similar performance due to the recent outstanding performance during the pandemic and lockdowns, and so people are perhaps less bullish. Now I'm going to continue to buy. I hold roughly around about 6,100 and I believe 13 shares at an average cost of about £2.29 each. I'm going to keep pushing that average down. I'm not concerned about how much of a size Boohoo takes in my portfolio. I am not concerned about diversification. It's protection against ignorance. I do not feel I'm being ignorant, other than perhaps my holding in another company, which I fully well admit was a mistake. I will continue to buy. No concerns of the volatility, because I could close my eyes, wake up in 10 years, which would be a bit dramatic to say the least. I do need to catch up on my sleep though with the bags under my eyes. I could do that, and in 10 years time I would still be comfortable, obviously providing the story hasn't changed during that time, but then that could apply to any investment you make. Then we also had Asheton Group. This is a holding I sold out of for roughly 110% profit. And perhaps you might be going, well, look at these results, they're exceptional, that was a mistake, you shouldn't have done that, you should let your winners run. And don't get me wrong, you're not wrong. I should have perhaps continued to hold. I should have only trimmed the winners and let it continue to run in the portfolio. But I did sell this to buy shares of Boohoo, which at the moment would be a double negative, because I sold shares in a winner that's continued to go up after selling, and I've bought shares in a loser that has continued to fall since buying. No concerns with me. You can see that their revenue growth, right, for the first half of 2021 has grown by 18%. Wow, that's great, isn't it? For a company that is like something like 20-something billion pounds of market capitalization, fantastic. But you've got to remember, this is based off of 2020. We're looking at last year's performance, in which they were in a lockdown. They did have significant concerns, and so obviously their growth is going to look better than it is. However, it is quite promising, because we've seen obviously operating profit increase quite substantially, and obviously EBITDA. So there is obviously some promise there. However, it's not that great. I think it just looks better than it is. But don't get me wrong, I think this is a very high quality business, and one that there's no real reason to sell, in my opinion. It was just the only reason I sold is because they lacked the growth I was looking for in my portfolio. They were a bit too mature for my standards, and we will see over time if this was a mistake that I sold up. I wouldn't be surprised if it continues to go up. I'm weighing up the opportunity cost. That's why I sold out of Asheton Group after their phenomenal one-year performance of about 100%, bought into Boohoo, because I felt that Boohoo over the next 5 to 10 years will outperform that of Asheton Group, and it's not purely speculation. We've also had Argo Blockchain's operational update this week. It has been a very busy week, I know. They mined 185 Bitcoin. They've now mined 1,831 Bitcoin year to date. And the Bitcoin they mined this month was an improvement of about 18, which really isn't that phenomenal. We have seen obviously their revenue is now it's £8.29 million. So it's pushing up, it's doing well, but this is quite an underwhelming amount of Bitcoin to mine. Like, they now have 1.605 exahash of a mining capacity, and they're only getting 185 Bitcoin. I'm not sure what's quite going on here. I don't know if they're switching off the machines to inflate their margins, because their margins are great. It's better than the industry. But I'm not sure entirely what's going on here. So long as Bitcoin holds its value, and if you're bullish on Bitcoin, then it's probably a very good bet, then it's likely the shares are going to do well over the longer term. At the moment, they hold 2,317 Bitcoin, or Bitcoin equivalent, which means obviously they may hold some others like Zcash, for example. They aren't really looking to sell. I believe Peter Warner's Q&A had mentioned that he's not really too interested, but he'll do it where needed for smart growth. Their facility is still underway. They're projecting it to be done by mid-2022, I believe, and that's from memory. And so there are some obviously positive drivers for the shares. It just really depends on how the markets end up, because we're seeing perhaps a lack of liquidity from investors. We're seeing quantitative easing being withdrawn or perhaps tensed. I can't remember the word for this. and that's through the Federal Reserve and obviously the Bank of England. So obviously there are some concerns in the markets and fears over potential interest rate rises, and I don't know how that will impact Bitcoin. Bitcoin is a fairly speculative asset, so perhaps an interest rate rising makes cash look more attractive, and therefore people are less willing to put their money into it, and we may see quite a troubled time for the asset class, which is exactly the reason why I'm not buying more shares of Argo Blockchain, despite being about 40% down. It is what it is. I made a mistake buying in. I don't want to become a rabbit, as I mentioned, The Art of Execution, written by Lee Freeman Shaw, about when really to buy and sell, how the world's greatest investors were wrong most of the time, but still made millions. Very good read, link in description down below. And I feel that I should be careful, but at the same time, if I'm not substantially averaging down, I do think they've got long-term growth, but I'm putting my capital elsewhere. It's a very complicated situation. I think it's quite unique, at least, providing to that, but I'm going to have to reread it at some point, just try and absorb as much knowledge as possible. And we'd also seen the Celsius resolution. This was a claim that had been ongoing in the last year. Argo have paid them about $6.3 million, and that's pretty much the end of it for the Bitmain S miners. It's not really that important to me, but it's terminated their lease that was started in November 2020. Hopefully they'll then use the other capital to purchase more machines or help develop, and I believe it was just an amicable. It's not really that great as far as I'm agreed. I think they paid Celsius to have them run some miners themselves to mine Bitcoin, which became, there was a fallout over that some time back. It's not really that big of a deal. It's paid out, it's dealt with, that is that. And then we've also got Asheton Group. They've created a new sustainably linked bank facility, which basically means they've got access to £185 million of credit facilities. And this facility has an initial term of 4 years, which is up to 6 years. This is to do with their agenda for perhaps improving their ethical, social, and governance, where they've got all of these goals down here. Yeah, it's great and all. I'm not particularly too interested in it. It doesn't really say anything about an interest rate of this credit facility. But if they've got access to the debt, they have the cash anyway. Why not? Debt is quite cheap at the moment, so it does make sense, providing they don't overuse it or become very risky or aggressive with their use of it. I have no concerns, and I think overall it's a good thing for the company. It's another positive. They've got it from the leading banks, Barclays, Lloyds, Santander, NatWest, and others. So it looks quite promising indeed. But I obviously have underperformed this week. My portfolio, I still hold 45% of Boohoo, but it's just because everything in my portfolio is falling down. Argo Blockchain in particular, it just means it makes Boohoo look like they're doing a little bit better than they are. If you want to keep live access to my holdings and not wait till each Sunday of the week, you can actually sign up to the Patreon. It's £2 a month. That's it. You get your own free templates. If you want to track your own stocks, you can do that too. And you also get access to my private forum as well. So if you're interested in that, there's a link at the top of the description down below. Hope you enjoyed this update. Have a fantastic week.